want to get out to our reporter, Brian Cheung, who is on the phone for us from Washington, D.C. Brian.
Hi there, how are you? So we're looking at the current Fed statement right now. They did announce a 25 basis point cut that does take the current range now down to 1.75 to 2% for their target range. Not much actually really changed in the statement itself. It was kind of interesting to see that they used a lot of the same characterization in describing the economy. Still said that the labor market remains strong. The economic activity has been rising at a moderate rate. In fact, one of the few changes in there was actually about household spending, continued to describe the American consumer as rising at a strong pace, and that business fixed investment, as is kind of the story as we've seen through this continued trade war, has weakened. That's kind of the new language that they use, but also added that U.S. exports appear to have weakened as well, so kind of showing some wear and tear as a result of the trade war that has happened over time. So, definitely in view as Chairman Powell heads to the podium in about 30 minutes or so to talk about what sort of changes we've seen since the last meeting in July 31st, where the Fed cut for the first time in over 10 years. So a lot will be in view, given all the changes that we've seen in the last 6 weeks in terms of geopolitical tensions and escalations in the trade war. The other thing worth noting is just the dot plots that were released along with this statement today. So there were 7 members of the FOMC that telegraphed, at least maybe one more rate cut by the end of this year, although the median dot does project, in the current range of 1.75 to 2%. What that does tell us is that, FOMC participants do see, at least a good amount of them, 7 of them, maybe a case for one more rate cut, as the Fed has 2 more outstanding meetings at the end of this year, one being October 30, and then the other being December 11th. So a lot to watch for as we do head into that press conference in about 25 minutes or so.
Brian, I know in the story that you're preparing, you're talking about the Fed trying to regain control of interest rates. It was a discussion here on Yahoo Finance all morning long, what they've been doing in the overnight repo market. Have they given us any indication about setting up some kind of permanent facility in order to deal with that issue, the liquidity issue, which, by the way, Vincent Reinhart, when you were on with us, Brian, Vincent Reinhart actually said, there's much ado about nothing here. Don't be too concerned about it. What is the Fed telling us?
Yeah, well, you mentioned the standing repo facility. This is something that has kind of been talked about in the past about whether or not the Fed should have some sort of standing repo facility to address liquidity in the overnight lending market. That would be a mechanically difficult thing to do. There's kind of a lot of moving parts in how you would implement that. This is fairly wonky. What we do have right now is kind of a daily morning operation by the New York Fed, but it's not standing. It's not always available. This is something that the Fed has been talking about, but as we've seen, the actual repo issues really only inflared yesterday, or Monday night rather. And because of that, that gave the FOMC not a lot of time to really address this. Keep in mind that the actual FOMC meeting only began yesterday. So it was unlikely that we were going to see any sort of announcement on the standing repo facility today to begin with. But what we did see is that the Fed did a kind of a temporary fix. They have an implementation note where they said that they actually lowered the interest on reserves by 30 basis points. And keep in mind that the change to the actual target range today was by 25 basis points. And kind of what that more dramatic change in interest on reserves does is it hopefully gives banks a different floor to work with in terms of how they lend to one another. This is the transmission mechanism by which the Federal Reserve actually tries to get its aspirational interest rate target into the actual market itself. So this is kind of a slight change. The Fed has done this before. They actually did it in May already, so nothing new there. But as far as the standing repo facility, could be an interesting question as we get into this press conference about whether or not there are more structural things the Fed could do to get control of its interest rates.
Okay, and Brian, I know you will be at that press conference. We'll let you go for now. Thanks so much for giving us that update.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.